Hi, everybody. This is Mandie McMillan, the real estate chick, owner of Remax Coastal. I am here with Clay Smith of Cross Country Mortgage. We are talking about the difference between the 2008 recession and what's happening now. So, hey, Clay, how are you doing? And what do you think the difference in mortgage standards are compared to back then?
Yeah, thanks for having me on, Mandy. Appreciate it. My name's Clay Smith. I'm with Cross Country Mortgage. I've been in this crazy mortgage business since 2002. So we're doing loans before the financial crisis, and saw the lead up to that and what was happening in the market that basically created that financial crisis, and created that recession in 08, 09, 2010 even. So kind of saw what was happening in the market that led to that, what created it, what the issues were there, and can really see the differences now versus then, right? And it's night and day. I mean, essentially back then, if you were breathing, you could get a loan. That over inflated prices because you had artificial demand. You had too many people out there trying to buy houses that really didn't qualify for them.
Mhm.
They were basically a foreclosure going into the deal if there was one slip up, right, on their end financially or with home prices or anything that happened in the market. That house was going to foreclosure. They should have never been in it in the first place. And and essentially our industry almost created that crisis. But with that created in terms of the finance world, right? I mean, to have a market that operates correctly, and in a free market that we capitalism is based on, you got to have the financial system and the banking system strong and healthy, and have liquidity and be able to loan and lend. That's that all spawns investment and everything, right? So when the whole economy crashed based on the financial system, and the financial system was in such a bad place, that's what took so long for us to recover, right? Because the banks were in such bad space, in a bad spot, and so many banks failed and had to have bailouts from the government. And that's just not the case this time, right? Banks are strong, they have money. We're not the reason for this, right? I mean, this
And
time,
standards were set. Lots of standards were set, correct? I mean,
right?
there's
I
a
mean,
totally different world.
yeah, I mean, back then, you could do a stated income, stated asset loan, 100% financing. I mean, now we need tax returns, we need, down payments, you need money in the bank. So the equity in people's homes has grown significantly, but it's also much more protected now than it was
Mhm.
then, because they're so qualified for the houses that people are in. So people can weather the storm that they couldn't last time, that created all those foreclosures.
Right,
So,
right.
and
Exactly. Mhm.
yeah, go ahead. And kind of talking about the equity there, right? That we've gone, that's kind of coming to this market is just a lot different than back then.
Yeah, exactly, exactly. And prices are not soaring out of control. Like you said, it was overinflated because there were so many buyers out there shopping because anybody could get a loan. Now prices have risen, and homes, but it's risen at a rate that's kept up with wages. So people can afford their homes.
Right.
Plus, the standards that were in place through set after after all of this happened. So now we have really strong homeowners, as opposed to the homeowners that we had before, like you said, that one slip up and it was a foreclosure, and that's how we went down that huge just slide into the abyss. Also, we don't have a surplus of homes on the market the way that it was before. So that's huge too, because the houses are actually they're selling for what they're actually worth and what they're valued. They're appraising.
Right.
That was another thing, is there were standards set in place with appraisers, and so that really helped to save our economy. And it's created a system now that really can't be fooled compared to before.
Yeah.
And back then houses were so expensive to buy. Tell me about what it would take to buy a house back then.
Well, yeah, I mean, that's why there was all that stated income stuff, right? People off their real wages couldn't really qualify. I mean, now you have to be able to qualify for those wages, and prove your money. You actually you've saved money. You're financially sound, and you know how to budget. You know how to handle yourself. Versus back then, it's just like I said, you're breathing. You
Yeah,
got a loan, right? I mean, and
yeah,
moreover, that inflated demand, inflated prices out of control, and people took advantage of it too. I mean, they would come back. I saw people refined 2 and 3 times, taking equity out of their house, right? I mean, They
Mhm.
acted like it was free money in an ATM when it really wasn't. So, when it actually came to pay it back and the house wasn't worth what they were lent, I mean, it was an instant foreclosure, and those constant foreclosures would just spiral the banks out of control and force them into such a bad spot. Um, and then you talked about appraisals too, right? I mean, when we order an appraisal now, I don't know who the appraiser is till it comes in. So there was an artificial demand there too, created between the relationship between the loan office and their appraiser. Like, hey, I need this appraisal today, and you better meet the value on this overinflated house, or I'm going to go what? Find a different appraiser. So
Mhm.
they cut off that relationship instantly. Fannie Mae did, and if you're doing a Fannie Mae conventional FHA, VA, any of those loans, then you got to prove you met the appraisal management requirements, that you order it, a random appraiser selected, and then once it comes in, it comes in. There's no bias there. So, you're getting real values on homes, and that's also creating, reasonable equity that's truly there.
Right, exactly. And people were paying interest rates, I mean, 6.5%. I
Right.
know me personally, back at that time, I was selling real estate at the time. I
Right.
wanted to buy a home. My first house, I think my interest rate was 9.25% on a stated income loan, which these days, had I tried to get approved for the same thing, it
Sure.
wouldn't have happened. There's no way. Luckily, I was one of the lucky ones that paid off that loan and didn't have any issues. But I saw it happening everywhere, and there were people with, like you said, no equity in their homes. And what is it now? I think I just read that over 50% of homeowners have equity in their homes and have a good amount, but they're not tapping it out like before. They're not treating their homes like an ATM. So that makes a really stable real estate market and home ownership market.
Sure. Yeah. I mean, people were doing, 2-year arms, go fix your credit. We'll do 100% financing, 2-year arm, go fix your credit. Home values are going to keep going up. And then what happened, right? They never fixed their credit. Home values crash. Rate went through the roof. It already started out at 7, then it went to 13. I mean, it
Yeah.
just, most of the loans that were getting done, I wouldn't say most, but I mean, so many of them were getting done that shouldn't have been done, that it's really what put it in a tailspin. But, kind of looking forward, right? I mean, all that's missing out of this whole system at this point is the consumer. The consumer is locked down at home. So the minute the consumer can come out of their home, guess what? They're going to start spending again. They can spend quickly, and that can get our economy back on foot and moving forward very quickly as well, right? So we don't
Mhm.
have the problem with the financial system that's going to hold the natural market from recovering super quick. Um,
Exactly.
I
I
mean,
think
it's
we're
pent
going to
up
have a
demand, right? Everybody wants out of their house and are ready to go to the movies, right?
yeah.
Or whatever, right? So as soon as the consumers let loose, it's going to come back quickly.
Yeah. I think our stock market's going to rebound very quickly. Our economy will. The real estate market will. I mean, people that are looking now, there are a lot of qualified buyers that are stuck in their house. They're looking online. They're ready to buy. This is not changing their circumstance or their situation. So it's not a time when sellers are going to have to fire sell their houses. Me personally, I have a huge amount of faith in our system because I've seen the difference. Like you, I was there at the time of the recession. I was selling homes and I saw what happened. And based on everything that I've seen that we've done, the mortgage industry has done, the government has done to ensure our real safety in the economy. I mean, I am personally closing on a building for our new offices next month for Remax Coastal. So, I have faith in our system, and I think that it's going to continue to grow and abound, and we'll all do well. So, just
Yeah.
reassurance to everybody out there watching: we're going to do well. It's going to be fine. Don't worry.
Cool. Sounds good, Manny. Appreciate you having me on.
All right. Thank you, Clay, so much. We'll talk to you soon.
Alrighty. Bye-bye.
Bye bye.